Welcome back to Invested. Looking at this question, it's funny, but it's terrible. How do I know my property manager isn't having a side deal with the contractor or tenant? I'm trying to help my dad manage his commercial real estate, one unit in a restaurant, the other in an insurance office, which he's handling through a guy that is supposed to be our property manager. I have doubts whether he has our best interest in mind. How do I know he's not charging the tenant more and we're asking from him? Second, outer walls of the restaurant is rotting, maybe by 80 feet, and he's telling us that the repair is going to cost at least $150,000. I've asked for an estimate, but he hasn't been able to produce anything yet. Is there anything I can do here, short of telling him that I'm going to handle it myself? It's a frustrating thing, and I think the trust goes a long way in any business, right? Regardless if it's your property manager or your agent or your leasing personnel, your staff members, your business partner, all these kind of respect and trust has to be built. And I'm going to make some assumptions. I mean, I'm pretty sure your father may know this individual, he or she, for a long time through church or PTA, or they grew up together. Or maybe I hate to talk about my family members, but as you can see, I'm Asian, I'm Korean. Sometimes my father-in-law, even my father, mother, they feel more comfortable speaking Korean. So sometimes they're going to use a Korean broker to find our house, which I don't need to use one, but it's for my parents and they feel comfortable and they're going to go with someone that's going to speak the language and know the culture a bit. But again, I had to fire those brokers because they're horrendous at their job. So I kind of feel you, but also understand where your dad's coming from. So let me unpack this a little bit and go one by one and make some assumptions. Also, this kind of alludes to how savvy you are in your trade. And, real estate investment and management, you hear all these gurus, it's passive income, you can do it, you buy two, you get the duplex, you live in one, you house crash it, then you refinance and buy another one, and you have passive income forever. Yeah, it sounds very easy, but it's very challenging. It sounds very easy to people who understand the concept and they made mistakes and learn from it, and now it's a program they know how to run. So to them, it's very easy. That doesn't mean there's no risk, but for them who have done 10 units versus you have done none, it's going to come naturally to them because all those issues they have gone through. So now let's tackle this. How do I know they're not charging more to the tenant? Number one, if they're going to be a property manager making a commission or making a fee for the services they render for you, they have to be licensed. And I know sometimes, getting a commercial broker license, and I apologize for people, I don't want to offend you guys, but it's easy. I started, honestly, 2 days. I took the test, pass, no pass, at my agent. And there's another broker test, passing rate 75%. I don't think it was that tough. You got to have that because they teach you ethics, fiduciary to your clients. Number one, make sure this person has a license. They know how to do real estate and kind of have that kind of sense they know how to do it. They have to furnish you monthly financials to be a property manager. So then you're going to have leases with the restaurant or the insurance office, and you know exactly what the tenant should be paying you. It's something called a rent roll. It's your property manager giving you a rent roll. And every month they're giving you financials like cash flow summary, bank reconciliation, how much expenses they spent to reconcile and show you the balances. That's number one reason that most people don't review. And that's where the inconsistency comes into play. And that's where you lose trust in individuals. So if I was a property manager and I was feeling that you don't trust me, I'm going to be even more transparent. I'm like, hey, this is the collection. Hey, these are the receipts. These are the deposit slips. And this is my P&L. This is the rent roll. And I'll take pictures when I go to the site. So you need to do that. So if they don't do that, you should ask them to do so. I do not know how much your dad pays this individual for their services, but typically they should be doing management and also accounting services if they provide that. And that's how you're going to know if they're collecting the right rents and charging the right amount to the tenant ledger. And if it's a retail, it seems like it's retail, it might be a full service gross, so they pay you rent. But if it's triple net, are they providing the CAM reconciliation every year and making sure they're collecting the CAM, property taxes, and insurance? So those should be all furnished in your monthly report that consists of narrative as well as financials. So that's one way to check if they're doing a proper job. Second, one of our outer walls restaurant is rotting. He's saying it's $150,000, but he can't furnish you an estimate. That's typically the issue that a lot of people go through. So even a very seasoned investor may have this issue come up and may get, I can't say the word too, but there is voluntary or involuntary mistakes that's made throughout by the property manager. So, they're just dipping here and there. And that only comes with it if you're an absentee owner. If you're going to the properties on a regular basis, you're meeting with your property manager on a regular basis, and if you're good at what you do, then they can't cheat you. So someone comes to me and says, hey, I need to replace a 2.5-ton HVAC unit. And, Charles, this is really old. It's an R22 Freon. They don't make that anymore. So we got to go with 410A. So we got to retrofit the electricals and the piping and the ductwork. So it's going to cost me $20,000. Well, if you don't know and you never have done that before, you might sound, well, that sounds expensive, but I don't know any better. You're the professional, so I believe you. And that individual might give you 3 proposals. Company A, Company B, Company C. $18,000, $20,000, $19,500. And that individual says, hey, $18,000 is the cheapest, but their workmanship quality is not as good as this $19,500. And you'll be like, well, that sounds reasonable. I'm going to go with the $19,500. But for any property manager who does real estate, 2.5-ton package unit for $20,000? That something is extremely wrong with that. Because R22 back in the days, rough estimate is what you use about $800 per ton. So then you should be $1,600. Or let's say call it 2.5 tons. So let's say 3 tons. So $2,400 for that. Maybe there's electrical, some piping, maybe $2,000. So right there, it should be no more than $6,000. So how can it be $20,000? If you knew that, then you're not going to get due. They can argue back and say, hey, it's a new premium XYZ. There's labor, manufacturing costs that gone up. Yeah, then you should go and double check with the different vendor and see if the vendors themselves are being honest or if your property manager is being honest. So you have to spot check those from time to time. And one thing I have seen is there was a property manager in Texas. I'm not going to say where. And when I used to go out to the site, they really wanted to make more money because she'll talk about things like, oh, when my boss has a Chanel bag, oh, she has this, she drives a Mercedes. I want to get there. Well, that's fine. Then a few years later, I go back and she has a nicer thing. I'm not saying anything, but there was a vendor that she keeps pushing, and this is a preferred vendor. Well, preferred vendor for what? They get for plumbing, drywall, unit turns, concrete work, carpentry, painting, roof work. Preferred vendor means you have a specific trade and you use those preferred vendors because they've been vetted. And even though they're preferred vendors, you RFP every year to make sure those vendors and contractors are honest with their price. So that's what you're supposed to do. But then they will give me a proposal with that preferred vendor at, $24,000 and this other vendor at, $28,000, other vendor at $30,000. So it looks cheaper, but when you unpack it and you go line by line item, their work is significantly reduced scope of work. So it's not apple to apple. So now if I take that apple to apple, their bid should be like $45,000. So I'm getting ripped off here. So then why would this individual keep pushing this preferred vendor? Because they're getting a kickback. There's no proof, but I've been doing management long enough. I know how kickbacks work. And I also seen a triple net property, a Hobby Lobby. I'm not going to tell you which state where we purchased it. The firm I used to work for, and our management staff is doing CAM reconciliation with Hobby Lobby. And we used to collect $60,000 of CAM charges. That's including CAM, property tax, and insurance. But then when we reconcile, we only spent $24,000. So we have to give the money back to Hobby Lobby, right? And most people think, well, if you collected $60,000, you're giving back like 30-something thousand. They should be happy, right? No, they're not happy. Why? 2 things. There's inconsistency. Number one, if they used to pay $60,000 and you only spend $24,000, the Hobby Lobby administrator is going to say, well, are you guys maintaining the property well? Do you guys pay the property tax on time? All different questions. Or they're going to audit you. Then you're going to show their books. Then next year, they're going to say, well, that's great. Now we're going to only pay you $24,000 a year on CAM charges because that's how much you spent. So then it looks funky. So when you go check that out and you look at the same vendors, ask the staff and say, hey, did you talk to the vendors? Why are their bids so much cheaper than the previous one, right? So the gardener, landscaper, they were charging $2,650 to $2,700 roughly prior because that's what they're trailing 12. But when we got the bid and we brought them down to $1,500 and you ask them the scope of work identical. So how is it that their scope of work that's identical and this is the same vendor, $1,500 and this other one was $2,700? That shows you the vendor and the property owner was skimping off on Hobby Lobby, because you're going to show them the invoice that you pay $2,700 a month in your Camry con, and they're going to kick back to the owner. So, I mean, that happens more frequently than not. So if you have a property management company, you want to use someone that has a good track record and that you trust. And the trust comes with a long-term relationship with that individual. On top of that, sometimes they're human. They make mistakes, right? You get too comfortable with the client. Charles had me do this for 10 years with them. And, I'm going to have his business forever. So I'm going to focus my attention on this new client because I need to get their portfolio. So naturally, they're going to focus on their portfolio, the new client, versus mine. So there's going to be oversights, mistakes, right? Something they would have caught many years ago. But now because they're so comfortable, they skim it through and they just pass it through, because it's triple net. So the cost goes up. And some people will argue, well, that's fine because the tenants have to pay for that. No. The tenants pay for that because that becomes challenging for their business. When the renewal comes up, they're going to look elsewhere because your overall cost, the gross rent payment, is not competitive. So you have to focus on learning your trades. Even though you have a third-party property manager, you have to learn some of the basics about property manager. How can you supervise someone you have no idea how to manage your property? Same thing. How can you be executive chef? You never cook just because you read some books about how to cook quiche and omelets, and now you're like, what? You're a chef just because you have money open a restaurant? That business is going to go under fairly quick. Why? Because you're not the chef. You don't know how much they're spending on their produce, their goods. You have no idea, right? So you can't be an absentee owner. You have to be involved regularly on your assets, right? Even though you use big firms out there, CBRE, JLL, Cushwick, global firms, they're going to make mistakes. So you have to stay on top of it. So, my advice to you is get some additional bids for the same scope of work. So you kind of know. You don't have to tell your property manager. You can go and get your own bid. So you have some kind of metrics how much it costs. So when they bring it to you, you can say, oh, the scope of work looks very similar. And I got a quote for $195,000. He was able to get a quote for $175,000. Yeah, he's honest. They're doing a good job, right? And also make sure you look at the financials, the collection, the reports. Don't skimp out on it because you think someone else is going to be doing a good job because you pay them. No one's going to do a better job than yourself. So I understand it can't be everywhere. So you have to know your trade. You have to know what to ask for. And you also have to spot check those assets. Go visit your tenants to see how they're doing. You don't know how much they're collecting? Go visit your insurance company, the restaurant. Go and talk to the manager, talk to the owners and say, how's business? And they're going to be a little shocked that the owner showed up. It was like, hey, just, the market's tough. The business is tough. We want to just kind of talk with you, make sure you do well, and just wanted to check out the business. Anything I can help you with. And guess what? The tenant's going to spew out every dirty secret they have with the property manager. They got to tell you everything. More information than you want to know, right? About their issues at home, their kids, everything. So once you get that information, you can also spot check how the property managers are doing. Because they'll tell you, like, our rents are so high. And you say, your rents is based on your lease. I know, but property managers say we spend a lot more money on expenses. So I know my rent's $800 for base rent, and we used to pay $100 on triple nets, but now he's saying it's $250, and that's just really tough for me. Now you know that property manager is charging $250. Does that match your financials? If it doesn't, you know what's happened. So these are some of the spot checks and things you need to do, and it's your money, it's your responsibility. You have to check. And if you have additional questions, feel free to ask specific questions. How to look at things, and I can probably give it to you offline and tell you more nitty-gritty details how to look at certain things a proper way. If you found this content helpful, please like, subscribe, and add us a comment. Thank you very much.